Hi to IPO subscribers. Welcome to eaglelive.ea. Today, let us review the main board IPO from TEMPSENS Instruments India Limited. Here we go on IPO presentation. This is the financial status of the company analyzed by AI-powered software, and based on the information given to the software, this company has been categorized as a healthy company. Let us see what are the financial strengths that made the company as a healthy company. First, the most important factor is health analysis solvency. Solvency ensures the sustainability of the company. Here, all the metrics are positive. So, solvency is strong. The company is sustainable. Good. Coming to liquidity. Liquidity ensures the survival of the company. So, here, current ratio is good and quick ratio also good. So, liquidity is very strong. Coming to operational efficiency, inventory turnover is a little bit lower. So, and gross margin, of course, almost close to 50%, no problem. It's not a negative. Receivable turnover is, it should be in between 7.8 above, 5.19. Okay, it's not a matter. This will be changing from time to time. It's not a day-to-day operations, no, depending operations, it will be changing. So we don't have to worry about that. Coming to financial irregularities, that is financial frauds. No financial frauds have been identified. So profitability, EBITDA is 113.17, EBIT is 99.35, PBT is 94.13, PAT is 72.24, cash profit 86.07, EPS 8.35. A little bit lower. EBITDA margin 24.82, very good. Net profit margin 15.59, very good. ROC is 21.61 and ROE is 13.54. Okay. Book value per share is 61.6 is good. So, coming to cash flows, cash flow from operating activity is a positive 42.02 and net cash flow is also positive 9.52 crores. So market values, market price of 300 is the cap price of the IPO. So based on the cap price of 300, price earning ratio is coming to 35.92. It is aggressive value. So in general should be less than 25. 35 point is at a higher side and not considered to be a fair one. So price to book value is 4.86. It should be less than 3. So valuation wise is very high. A growth point of view, all are positive. EPS is 11.18, okay, very good. And sustainable growth is 16.28. In general, we expect more than 25, it is 16. Okay. This is the financial analysis of the company and financial status of the company, and the company considered to be a healthy company. Now, here is the IPO review of the company. So, business overview. TEMPSENS Instruments India Limited is a specialized thermal engineering and industrial solution company. Core business, temperature sensors, contact and non-contact sensing solutions, electrical heating solutions, industrial heaters and thermal systems, specialized cables, high temperature and advanced conductor solutions, thermal monitoring, pyrometers, thermal measures, and profiling systems, advanced technology, fiber optic temperature sensors, competitive position. Approximately 10.5% of market share in India is temperature sensor segments. Approximately 21.3% share in non-contact temperature sensors. Among the few Indian manufacturers in several specialized product categories, exposure to steel, cement, power, chemicals, automotive, and other industrial sector. Very good. Growth opportunities, industrial automation and electrification, EV infrastructure, renewable energy, data centers, fire and safety systems, aerospace, defense, and oil and gas. India's temperature sensor and allied products market is projected to grow at around 9.4% CAGR through financial year 2030, supporting the company's long-term opportunity. Very good. Valuation. The key concerns is IPO EPS 8.34, price earning ratio is 35.9 times, PBE is 4.86 times, issue size is 650, fresh issue is 95 crores, and YF is 555 crores. The big question is TEMPSENS a good company at an expensive IPO valuation? The company has a strong niche position, but investors are paying a premium multiple for the quality. The IPO is also heavily skewed towards YFS, 550 crores out of 650 crores, and approximately 80% of the issue. Only 95 crores is fresh capital for the company. This company is selling, say, the total net worth of the company is 496.89, and 22% of the shareholding that comes to 113, they are offering for sale for rupees 555 crores. So almost 450 crores they want to gain. So it's up to the investors whether do you meet their expectation or not. Our valuation view, business quality strong, industry opportunity alternate, attractive, competitive position strong, PE expensive, PB expensive, margin of safety limited, no margin of safety I can say, and overall valuation premium. Good business, but investors are paying a premium price. IPO fund utilization, this is most important factor to be considered. IPO 650, 550 crores YFS, 95 crores fresh issue. Of the fresh issue, according to the supplied analysis, 73.13 crores for debt payment. Out of 95 crores, they are using 21.87 crores they are using for general corporate purpose. This amount they are using for debt repayments, and debt repayments, what they can save is, even if you take 10% of interest, they can save interest to the extent of 7.3 crores per annum. If you take income tax also into consideration, the net revenue the company is going to get from 650 crores, what the investors are going to invest is only about 5 crores. Just for 5 crores return to the company, should the investors invest it 650 crores? That is up to you investors. You have to decide. So, the only thing is, generally, what is mean by IPO? Company raises the funding through IPO so that the fund can be utilized for, is it for expansion of the unit capacity, or is it a working capital, so that there can be there can be a good turnover. And results will be, company will have good results, and investors also will have some good returns also. But here, the meaning of IPO has totally changed. It says 555 crores out of 650 offer for sale means, now should we change the meaning of the IPO? IPO means only for exit shareholders to gain for some good profits. Now I think it has to be changed. The meaning of the IPO has to be changed as per this IPO. See, that should not be. See, company should take the investors as part of their family, and they should leave the price how it should be fixed. No? It should be less than 25 PE ratio. It should be less than 3, so that investors also can benefit some future earnings. Here, they want to grab everything. It's up to you, investors. So this is my view. So the IPO is not primarily a growth capital raising exercise. Yes, a large majority of the money goes to existing shareholders through YFS, while the company's fresh capital is mainly directed toward reducing debt. So next is key risks: capacity underutilization, high IPO valuation, large OFS component, related party transaction concerns, delays in statutory payments, loss-making subsidiaries, ongoing illegal proceedings, limited fresh capital, or for aggressive expansion. Market sentiments strongly positive but speculative. The unofficial grey market has shown very strong interest ahead of the IPO. Money Control reported a GMP around 130 over to 300 rupees upper price band, implying roughly 43% of potential premium at that point. Other IPO tracking discussions have shown even higher GMP indicators, but these figures are unofficial and volatile and should not be treated as a guarantee of listing gains. I don't understand what the companies think of the investors. They are very much aware, the companies are very much aware that the investors, they don't mind even to lose the company, their hard-earned money, but they don't see the fundamentals. They go by rumors, they go by speculations. So that is the reason why the company is expecting 555 crores as against the share of the net worth shareholding of 113 crores. So why there is no respect for the investors? What is the why should they waste their hard-earned money just to give some profits to the existing shareholders? That is exit shareholders who are offering their sales, their shareholding. No, please realize, I am telling you, be smart, and always go by fundamentals. And your money is hard-earned money. It's not your bribes amount, no. It's not scams amount, no. You have to account for every rupee to the income tax department. In that case, why should you? As it is, SEBI is permitting all the companies, irrespective of their status, whether it's healthy, unhealthy, defaulting, or net worth, there we are losing good amount of money. Again, the companies like this, they are expecting good amount of money to gain from the offer for sale. Instead of up to you. So market sentiment signals strong gray market interest, attractive industrial theme, niche market positioning, my main board IPO, valuation concerns, high OFS component. Important, GMP reflects short-term market sentiment, not intrinsic value. Final investment view, business healthy, industry attractive, competitive position strong, governance watch carefully, valuation expensive, market sentiment strong, margin of safety low. Low. Conclusion, Tempsen Instruments presents a strong business story, but a demanding valuation story. The company benefits from specialized technology, niche products, and attractive industrial growth opportunity. However, at around 36 earnings and 49, 4.9 book value, the IPO leave limited margin of safety. There is no margin of safety, first of all, I should say. So our view, selective, wait for better valuation. Strong business plus strong market sentiment, but is the IPO price too high? The IPO opens on August 20th, 2026 with 285,300 price band and 650 crore issue. As always, investment decision should be based